My name is Jacob Christina, and I will be speaking on industry outlook as well as net working capital turnovers, and there will be financial analysis throughout our PowerPoint.
And my name is Christian Yankoski, and I'll be going over the company overview as well as investment summary and risks. And we represent the University of Minnesota Twin Cities. We are presenting a hold recommendation with a base target price of $50.57. MTS has a very strong reputation and is the premium competitor in its industry. However, we're seeing a shift in customer spending away from MTS's core competency in mechanical testing towards testing of integrated computer systems. MTS provides custom testing and sensing solutions, and these two business segments have very different financial characteristics. Test revenue is derived from R&D spending, whereas sensors revenue is derived from manufacturing and industrial machinery. Also, test has an order to delivery time of 3 months to 2 years, whereas sensors has an order delivery time of just 1 week to 1 month, and is characterized by repeat business. I'm going to talk more about how these different characteristics affected our valuation. Above me, on the top, is a picture of one of the more complicated test systems. This is a road simulator, whereas on the bottom, this is a motion feedback control sensor used in industrial cutting operations.
In order to better understand the industry that MTS is a part of, we conducted a Porter's 5 forces analysis of both the test segment as well as the sensor segment. A highlight of the test segment is that about 50% of the test segment revenue comes from ground vehicles, which is largely the auto industry. So this equates to more than 40% of the total revenue coming from ground vehicles. Another highlight from the sensors segment analysis is they actually have a limited number of vendors that supply them with the mechanical and electronical components that go into their sensors. So this could be a challenge for MTS if something were to happen to one of these vendors. Overall, both segments do face fierce competition from rivals who are willing to do less sophisticated solutions for their customers. But MTS does a really good job of maintaining customer relationships that helps them grow revenue through the years. Also, MTS has developed and trained highly skilled engineers, which is very hard to recreate elsewhere. In order to better understand MTS's revenue, we broke it down into their different sectors as well as geographically. As I just mentioned, a big highlight is that about 45% of the total revenue does come from ground vehicles. So this was a large part in how we understood where MTS will go in the coming years in terms of revenue. Also, both sensors and test segments depend a large part in industrial production and manufacturing. And with the recent economic downturn in the world, manufacturing growth has indeed slowed, which will provide a challenge for MTS. This graph is a good visualization of how important MTS's backlog is to the total revenue. Not to say that the backlog immediately contributes to revenue, rather the backlog is the mode at which MTS experiences economic downturns later on. There is a lag because the backlog can be recognized later on than when the economic downturn begins. This is best visualized by this graph of the auto industry's revenue in correlation with MTS's. We lagged it by 1 year, showing a very high correlation of how that backlog does indeed affect how MTS experiences economic downturns. Also, we use the auto industry as kind of a proxy to understand the top line growth that MTS will experience in the past as well as coming in the future. MTS does derive their revenue though from R&D, so there is direct correlation of the R&D spent in the auto industry as well as Caterpillar to MTS's revenues. Not to say this is a direct leader to if MTS will gain revenue, but it just helps us better understand what MTS's revenue will look like in the coming years. In addition to the auto industry, which as I mentioned before is a large part of their total revenue, we also use Caterpillar because that is a good indicator, or we assume it is a good indicator of manufacturing and industrial production in the world. Though when Caterpillar experiences a downturn, that doesn't necessarily mean MTS will as well.
MTS has a very strong position in its industry. It has long-standing relationships with its customers and has a reputation as a premium competitor. It also has a large advantage in human capital with a high-skilled, highly trained workforce. And its sensors business is extremely profitable with a 19% net profit margin. However, MTS does face some challenges. Over the past 5 years, its profitability has declined each year. And We have seen no meaningful acquisitions to increase their market share in a market that isn't growing very much.
As Christian mentioned, the profitability hasn't been strong in recent years. In a similar way, MTS has not experienced explosive growth. It's just been very steady. And one way we thought about this is how they're actually effectively using, or how efficient they are using their net working capital by looking at turnover. And as this graph shows, that their net working capital turnover has actually been decreasing, which doesn't help their top line growth.
So moving on to our valuation of MTS, we used a discounted cash flow method to value MTS. The one thing we noticed going through their 10K immediately was their presence in these two vastly different business segments, test and sensors. Christian spoke to the differences in order to delivery times earlier. The tests have a very long cycle, while the sensors have a short cycle, and this affects not only the working capital requirements, but also the cash flows. They also have different margins. Test margins are very much lower than sensors. In 2014, they were less than half. And we also foresee different growth opportunities, higher growth opportunities in sensors than in test. So we really wanted to try to isolate and separate the financial impact those two segments had on the company. So this is our base case DCF assumptions for growth and profitability. The bars on this graph represent the revenue for the past 4 years, as well as 5 years projected in the future for each test and sensors. And the lines represent the EBIT margins. We can see a historical decrease in margins for both segments from 2012 through 2014, but they had a slight recovery last year, and we project that to continue in the future. We also see a growth in sensors over time. We project that growth to continue. And though we haven't seen growth in sensors for the past 4 years, we do think they'll be able to achieve slight growth into the future. So to calculate a discount rate for this model, we did a WACC calculation. What you see here is the CFAMN model used to calculate cost of equity. And since MTS does not have any net debt in the capital structure, this value is the same as their WACC. We got 8.71%. So here are the cash flows we got. To calculate our terminal value, we used a Gordon growth model with a value of growth in perpetuity of 2.55%. This is consistent with the World Bank estimates for world GDP growth in the future. So we just believe that MTS can continue with that. And in the bottom right here, you see the implied multiples from our model. In 2015, it's a multiple of 17, and we think that will decrease in 2020 down to about 15 or 16. And this is consistent with our idea that MTS can't continue their same growth as they have in the next 5 years, but they can continue to grow. And here's a graph representing our sensitivity analysis. We have a bull case, base case, and bear case. Best case scenario, we think MTS can reach a price around $68. Our base case, as mentioned earlier, is $50.57. And our worst case scenario is $41.77. That is based only on the DCF model. We also looked at a multiples method, but since MTS doesn't have any clear direct competitors, we didn't think it was that reasonable. We did try just to make sure we were in the right range for our estimate. We did a weighted cost of capital with Moog, Illinois Tube Works, and Danaher. We thought Moog was the best competitor. Illinois Tube Works and Danaher are both conglomerates that see only about 10% of their revenue in the test segment. And when you plug those numbers in, we got an estimate of about $53.99, which is in line with our DCI model.
So as MTS's revenue is derived from R&D spending, they are very sensitive to economic downturn, as R&D is one of the first spending cuts during recessions. And in addition, we're seeing this shift in customer spending away from testing mechanical properties, where MTS's core competencies lie, and towards a shift in testing integrated computer systems with the new smart cars. In addition, they experience the effect of currency changes different than a typical exporter because their revenue is derived from R&D spending, whereas a typical exporter, the appreciating dollar would hurt their revenues. MTS, the appreciating dollar increases exports and foreign customers, and because of that increased revenue, there's more fundamental economic demand for MTS's products. So they have a natural hedge against the appreciating dollar. We've also seen consistent share repurchases over the past 10 years, and we believe that this both signals a lack of growth opportunities for the firm and also increases the sensitivity of the price of the stock to sale by one of these institutional investors.
So in conclusion, we are issuing a hold recommendation with a base case target price of $50.57. Thank you. I'll open up for questions, of course.
Good job, you're running the wire. I had a financial modeling question. The last couple of years, we've showed that MTS is having trouble growing their top line. And partly as a result, operating margins have decreased the last 3 or 4 years. Yet in your model, it sounds like you've got a fairly slow growth outlook, but you've got margins expanding in your financial model. I'm wondering what the key drivers are behind that.
Yes, we do. MTS has said that they are working on improving their operational efficiencies, and while we haven't seen that over the past 5 years, last year we did see a slight increase, and we think that's a sign of positive things to come. If you look back at their margins historically, they were quite high back in 2011, 2012, and we feel like they could return close to that, if not reach it again. Although we do recognize the difficulty in it, specifically in test, with their drop shop type process, it's really hard to achieve economies of scale and efficiencies when the projects are so unique each time.
MTS is a large percentage of revenue connected to our ground vehicles. We've seen a significant increase in sales in the United States in auto since 2010, up to $17 million or million unit number. If we could see that and continue to see that plateau, how do you see MTS able to deal with a situation where we have a plateau or we hit that number?
Yeah, so as I mentioned before, MTS does, as you also mentioned, ground vehicles, and we use the auto industry as kind of a proxy. And so we just saw, as you mentioned, record sales last year, but the auto industry goes in a cycle, so we expect the cycle to start riding down from this point, which is again another challenge that MTS's top line will have to face.
After your study of the company and what you know now about its strategy and its financial structure, what would you advise management to do to create more opportunity for the company and shareholders?
We believe that they need to invest in this integrated computer systems testing, which they're on the right track. That has opened a new office in London for those purposes, to move away from their model and testing mechanical properties. They also have a lot of financial flexibility with their lack of long-term debt, and we believe that this is a key to keeping their options open in the future for acquisitions or expansion into different markets.
Could you spend a minute and talk about management compensation? What are the metrics the management is compensated on? What metrics is it used to pay?
We did not look at that. Sorry.
Thank you. You guys clearly spent some time on go over the company's competitive position within their industries. Can you maybe just briefly just kind of go over that once again? And did you factor that at all in your evaluation? And if so, how? Thanks.
We did not factor in the multiples method into our evaluation of the graph you saw. We just used it as a check to make sure we're in the right direction. Obviously, ITW and Danaher are very different, but we thought they could be used loosely as a metric to compare. So we felt that the value we got out of that weighted average was fairly consistent with what we had, and a better indicator than it would be to just use those raw numbers. The closest competitor we determined was Moog, and as you can see on the right column there, if we just use Moog's multiple, it predicts a price of $40.99. So we predict that MTS will continue to outperform that in terms of their multiples.
It was really difficult to find comparable firms to use in our evaluation because MTS's competitors are primarily private firms, and companies that do the same thing as MTS usually offer it as a larger suite of services, like with ITW and Danaher. ITW acquired Instron. So the financials are really muddy, and it's difficult to really use it as a comparison for MTS.
You guys were able to go out for analyst day and visit with the company and management. I'm wondering if you did any additional research, some of the past conference calls, and if you did, if you were able to get a flavor for management and whether they've been they're optimistic, overly optimistic, or do they have a track record of under-promising or over-delivering?
We did get the impression that they may be overly optimistic based on investor presentations and their follow-up communications. They seem to be putting a lot of weight on expanding their service business, which we believe will be difficult and also wouldn't really improve their revenue growth that much. In addition, they consistently rely on strategic acquisitions to supplant their organic market growth, but we haven't seen these acquisitions materialize in the past 5 years. But we do recognize that there are a lot of challenges in this type of industry, where it's a very niche industry, and especially with this type of high-skilled, high-trained labor work, it's very difficult to actually implement initiatives.
So you have a $50 target, is that right? And the stock closed at 53. So why hold and now sell?
Again, it's just a large upside. We feel that MTS is a very stable company, and while it doesn't have the greatest growth opportunities, if they are able to find one great acquisition in the next few years, or if they manage to achieve just a slight operational efficiency, we believe their price can jump up higher than it's at now. And the model's not exact. That range, 41.77 to 68.56, isn't that precise. There is a lot of room for upside. That's just an estimate of what we think.
We've also seen this trend of offering test as part of a larger suite of services with Illinois Toolworks and Danaher. And MTS's former competitor, Instron, was actually acquired by ITW. So we believe that there is a possibility of acquisition in the next 5 years for MTS to be integrated into a larger conglomerate. And we believe that this option is important to have, and there's a premium there associated with that that makes it worth holding the stock rather than selling it.
You guys touched on this a little bit, but obviously, their backlog has grown pretty impressively over the last few years, but it really hasn't translated into revenue growth. Why do you think that is, and kind of what is your view and your outlook on that trend going forward?
As I mentioned with this networking capital turnover, they may, Ryan kind of touched on this before, that since it's kind of a job shop process, they may receive more backlog, but they aren't necessarily getting better at turning that into revenue. So that's why we kind of have very small, if not just plateaued growth for them, because they haven't really shown us quite yet that they're getting better at turning these backlogs into actual revenue.
So do you have any outlook on, do you think that metric's going to improve, get worse, stay the same?
Sorry, what's the question? Is this a follow-up question?
Sure, yeah, no. Do you have a view on that trend? Do you think that's going to improve? Do you think that's going to deteriorate, stay the same?
We think that there's room for improvement for that in the sensors, since those are more of a commodity and they can produce them, find easy ways to produce them. But with the test, we really think it comes down to how fast the engineers can find solutions for the customers rather than how fast they can put them together. So we think that the bottleneck may be human capital rather than an operational efficiency.
Thank you.